Good day, traders. 1 minute mindset reset. It's Tuesday, and today we're talking about thinking and trading like an algorithm. So we had some interesting charts today. Yesterday, Monday, was a very good day for a lot of traders, and we had some large moves on Friday. And today we had some charts that moved very well in London, and then we had markets that were sort of, I suppose, poised heading into the U.S. session, and only major red news was on the Canadian dollar. So one of the things that's important, and we talk about this, is the behavior of price when the window starts, the high and the low of the day, having a thesis already in place in terms of signal days or an overall behavior or pattern of the trend, the opening range, and the initial balance. And so today we had a market in gold that had come up 3 levels from yesterday's failed breakout of Friday's low of day. And the video that we talked about yesterday was geometrical structures, rectangles. And whenever you can contain price between peak formations, you potentially have a geometrical structure that could be coiling for a breakout, whether that's a trend trade or reversal trade, and thinking like an algorithm. So I had a trader mention to me the other day that, all this is 50-50 and he uses an algo. But let me explain something what an algo is. An algo is timing, levels, and behavior of price. And so when we trade like that, you're actually trading with the algo. And so most traders who think they have an algo are using all kinds of indicators to determine their entry and exit criteria. And they feel because they've got these indicators that are automated, that over the course of running a basket of trades, that their expectancy is positive, so they run the algo. Now the algo by itself is probably no good unless you run multiple algos for different market conditions, trading ranges, trend trades, reversal trades. So if most large funds, hedge funds, institutions, private traders who run algos will run multiple algos, and that's to distribute the basket of capital evenly, but also to control the risk of having one algo being subject to all market conditions. Because obviously at some point you could have a market that's a trending algo, and you all of a sudden get caught in a choppy market and it chops back and forth, and unless you shut the algo off, it's just going to keep hitting trades and stopping you out with losses. So they run multiple algos so that over the basket of trades, their expectancy on the whole model itself is green. As a retail discretionary trader, the whole point of trading best trade setups is that you remove yourself from trying to trade movement in the market, and you're targeting high probability 90-10 opportunities. And so some traders find it frustrating that, for example, today's gold trade, several traders hit that. Other traders were trading indexes. Then the Dow, the DJ30, gave an absolutely vertical blow-off move in the gap time between London and the US, went 3 levels of rise above the high of day and collapsed and went sideways into the New York Open. And that went vertical for 100 plus pips straight down, zero heat. So these opportunities are everywhere. Gold's 3 levels of rise. We had a large move down on Friday. We had contained geometrical volume in an upper 50 pip box above double zeros after 3 levels of rise, 30 minutes at the high with an engulfment candle. That engulfment candle locks in the high consolidation. The high is locked in. So we've gone over front side, backside. One trader asked yesterday, well, I thought you didn't use EMAs. Now I've made this very clear and I'll repeat it. The point of the EMA is to remove analysis paralysis for all of the traders in the coursework themselves, so that there's no discrepancy. It's either front side or backside. If you're getting in on the front side before the market has actually locked in the high or locked in the low, that's where you can get chopped up, which is why we talk about the timing window, understanding the setups that you're trading. I don't even have any of that on the chart. So if you have it on the chart before you even get to the timing window, nowhere in the playbook or anywhere else has that ever been mentioned. The only place that indicators like that would have any value are when you get to the extremes. When you get to the extremes or go outside of the extremes, just like when they were at low of day today. That's when smaller time frame traders 1 minute, etc., will be looking to nail the entry on that reversal at the New York Open. So not necessarily buying the low of the day, but once they lock that in and it goes sideways, that coil right at the beginning of the third hour for an explosive vertical move through the high of the day is a optimal area for targeting that reversal on the shorts. And just coming back to that, the creeping, slow, methodical movement that takes 90 minutes to get down to the low of the day is a ripe chart for order flow for a market to go vertical through. So again, recognizing the behavior of not only your trade that you're in, so you're in a trade from the high of the day to the low of the day, but the slow, methodical back and forth is their algorithm building order flow for the reversal trade to plow through and clean out all those shorts who haven't taken any money off the table. So in terms of, people say, oh, I got an algo, that's all 50-50. There's only three things on the charts: numbers, the high and the low of the day, and the time of day. That's it. There's nothing else there. Three things. I mean, unless I'm missing something. So I'm not sure what else can be clearer. But what's important is that you target the setups that you resonate with the best. Like, I like to short stuff. I like parabolic trades in the long direction when they come. That doesn't mean that I try to short it and go long all the time, go back and forth. But I like to see parabolic buildups for explosive moves, because those are ones that will not come back typically. So day 1, day 2, day 3, if we see those. Short trades, high a day. If we have 3 levels, if we have a well-engineered chart. So I made that statement. Study well-engineered charts. Those are the ones that are clearly defined with peak formations and levels of rise and fall. There's a specific agenda behind building that chart. When it's very well-engineered, when there's wicks and movement everywhere, I won't even bother looking at a chart like that. I want to see a chart that is very clearly defined, because the algo has built that, whether that's all the collective large trading groups together who, unbeknownst or beknownst to each other, are engineering positions in the market for movements later with they're obviously engineering order flow for larger movements later, or building positions for a larger movement to come or to hold. But targeting setups, you want to target what you understand and recognize. If you don't get it, just because somebody else has hit the trade doesn't mean that they need to justify that. If they have a trading setup that they've executed on and you haven't seen that trade, that doesn't mean that you had to take that trade. And it doesn't mean that they need to explain that. You either see a setup there or you don't. And if you see some other setups better, focus on the ones that you trade well. Focus on the setups that you trade well and get better and bigger at them. I caught this one, I caught this one, I caught that one, I caught that one. Again, like I said yesterday, take 1 or 2 trades and learn to size up in those if they're best trade setups. I don't want to spread myself all over the market. Okay, I got 100 pips on 5 different trades. Why not get 50 pips with 10 times the size? I mean, that's just, to me, is like, nail the trade, get in, take the money, and get out. Increase size, keep increasing size, but focus on the highest quality setups. So hopefully that makes sense. Learn to think and trade like an algorithm. Nobody gets a free lunch. Get bigger, get better, rinse and repeat. Hopefully traders had a good day today. Had a bit of snow and frost, and just got back from the gym. So have a great day, traders. 1% better every single day. Think and trade like an algorithm. Price, high and low of the day, of the week, and the time of day. Have a great day, and may the markets go with you.